Good morning, guys. I am doing this quick because we only got 10 minutes. So I'm going to get you shared up here. And then, yeah, okay, it went. All right, so now I'm going to get you shared up. And then I'm just going to go through this is Think or Swim. This is the program that Charles Schwab is the broker that I'm using here, and this is a paper account, which is a uh, imaginary money account. So right now, I'm trying to see here where I have left this because one of my problems is I kind of quit paper trading and just focused on my real money, and should have stayed in here because it would have given me more reps at the actual trade that I need to be taking. But we won't go into that too much. I'm just trying to show you um, how this operates. So right now the account is at $138,000, and I don't have my glasses on to allow me to see the computer screen better. So let me do that. All right. Yeah, there we go. So yeah, right now we're at 130, actually $137,000 cash and sweep. So that's like basically what the account is worth if you were to sell everything. And I don't even know what I have here. January 15th call for $29. Interesting. Okay. So if we put that on the chart, and then in this paper account, it does this thing where I have to like blow it up to see my 30 days. I've got it set for 30 days, but to see it. So this is what the account has done in the last 30 days. It went down one day and then worked its way up with some down days in there. But right now it's at 2740, and I don't. So what this is, this position, right? I'll explain it because I'm going to leave it there, and then I'll get into what we're doing with the 1%. And I'm going to try and do this in a very short, like keep it under 10 minutes. Um, so this is saying that January 15th, I have a call, January 15th, 27. So I have, these are not covered calls. So I didn't buy the actual stock ahead of time. And then that what I'm doing is I'm saying that I think the price will be above $29 by January 15th. And I have a contract that will allow me to sell. Well, I have 10 contracts so that will allow me to sell 1,000 shares of that. So someone who wants to buy them, or if I want to buy them at some points, because my thesis, right, is that this will be by the end of the year, or I'm sorry, yeah, the end of next year, that it will have risen to $29. And I went and I did that. Where's my time frame? Yeah, I did that based on, I don't like how their chart works in this respect, but I did that based on looking at their overall chart. And this was their last year, December 3rd of last year. They were at 29, and then they kind of went down. We had this big thing. This was in April. This was when we had the entire market drop because of the whole tariff situation and everything. And then it has slowly chopped its way back up to where it was. Um, this is back in March of this year. So, right. So now it's about where it was before the big drops. And so my hope, my thesis rather, is that it will continue to rise over the course of the next year to get back to where it was at the beginning of a year ago today. So as that happens or doesn't happen, there will become the position that I have, well, the value of it will go up or down. So I bought it for 73 cents. Right now, it's only worth 72.5 cents. So it's there. So as the price moves up, then it will perhaps look better. I'll explain that one when we, as we move forward. But here is, these are the weeklies that I've already determined. Well, we'll look at the champions list as our watch list. And these are all companies. I've already looked them up and everything that have dividends. That's what those little green square or green dots are, is they have dividends soon. Um, so December 15th, they have dividends. And I'm just going to do one right now just so we can go through the process. And I'm not going to really look at them as the way I need to, because I've got 5 minutes to show you this. So I am just going to take, I'm going to arrange them by price. I want the highest price. Okay, there we are. They're arranged by price. Here's GPC. It is a champion. It has a dividend soon. So the fifth. Okay, so then I'm going to. Uh, it's on the chart. Okay, so now I'm looking at it. Let's go back to the monitor of the deal. Okay, so I need to go back here to the beginning of the month, or the 30 days, and blow that up a little bit so we can see. All right, generally I want to be 2 days to the upside, so I'm not going to use that one because I'm trying to show you that very thing, the discipline part. So let's take a look at that one. Let's move this up some so I can really see it. Well, I can see, that one doesn't have the 2 days to the upside either, but it does have a dividend at the end of the month. And the reason for the dividend is not because, okay, yeah, we're going to have a little trouble finding one that's got a couple days up and not already at the high. Okay, sometimes you don't find the trade. That's the other part. There's one. It looks good. That's Procter and Gamble. I'm not going to worry about when they have their deal, but we can see that's one day up after a drop. And that one's at a high. There's one that's in the middle at least. And showing upward pressure. Okay. All right. I'm liking that. At least from that angle. Okay, this is the last 30 days. It came down, it dropped down. Gaps have a tendency to fill. I actually like that. Because even though this is moved down, because that gap means that price dropped. I'll just say that gaps tend to fill. I won't go into my thesis on that, but it goes down. Prices went down, 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 and now it has started to revolve back up. We look at this down here. This is the same on a 90-day. No, this was actually a year long. So this is the whole year. So again, it went down in April, shot up, has had these drops, is ranged in this area for the month. Now, this is Emerson. Okay, so let's look at the trade chart. I'm just going to do this thing and then look at for Friday. The price is currently 131.84, and I'm going to do this as a covered call, so covered stock. So if I wanted to buy the 132, so somebody, is that correct? Okay. Yeah. All right. So I'm just going to do this one real quick, to get ourselves out here in something like the time. All right, so what I'm doing here is agreeing to buy. I'm going to take this down to one contract so that we can not freak ourselves out with a whole bunch of money. So this is a pricey stock, so it's $131 per share. So one contract covered is going to cost me $13,000, right? Because I've got to buy 100 shares of that at $131. So it's going to cost me $13,000. It's okay because my account is $100,000 in this account, in this simulation account. But my profit on this is only $139. If they buy the contract, if indeed they buy the uh, where's I'm trying to get all my stuff. Oh, it is over there. I do have a calculator on the screen. Okay, so I have a calculator here, so I can do this real quick. Is to say that I'm taking $13,000 times 0.01% means that I need to get $130 in order for this to fit my 1%. And I'm getting $139. So that will work for me. So if on Friday the price of this stock continues up and is over the $132, then the shares will be called away from me, meaning they'll be bought by that person for $132, but I am paying $130. There we go, $130 for it, right? Because my actual outlay is 13,061. And again, if we take our calculator up here and we take that $13,061, right, and divide that by 100 shares, we're paying $130 per share, right? $130.61 per share. Then we're going to sell it on Friday because we have a contract to sell it for $132. So I'm making the money in 3 days, Wednesday, Thursday, Friday. If that works, it's 1%. If it doesn't, then I have the stock itself and I can rely on these things and the fact that it is on my list here, which probably means I can't look at the overall chart. It would show me all the dividend periods, but that means that if I am stuck with it, I'll be getting a dividend in that period. But the plan is to get rid of it well before that. The dividend is just there in case you're stuck holding it. Like right now, I'm stuck holding Webull, which doesn't have a dividend. Shouldn't have been in it, but that's okay. This is the process that I'm showing you. And that will fill during the day while I'm at work. And that's the entirety of the process. Then we'll check back in on it tomorrow and the next day just to kind of see where the price is at and to see if we need to do something. The price suddenly makes moves, we may want to do something differently. Sometimes you can sell them sooner because this is not actually, we're not in that position. It could get the person who bought the contract could conceivably exercise the contract tomorrow, right? Like if stock went up to $135, they might be like, "Ooh, I'm getting these for $132 right now," and then they would be able to lock in that profit. I won't get that profit. I'll get my little 1%, but 1%, 52 times a week or 52 weeks a year is 50%. So that's pretty good. So we'll end it there. And I did it in under 15 minutes. And I'll just take that as a win and hopefully explain tomorrow. I'll go back and look at some of the real trades that I made over the course of the last year and see how we got there. And then we'll monitor this position as well as start doing that. So see you tomorrow. Good morning. Have a great day. Make sure you bundle up because it's supposed to be like 20 degrees. Cold front coming in. It's going to turn around at noon. So that's your weather report. All right. Goodbye. Have a good day. Oh, I'm late. I am late.